Was anyone able to catch those trades fairly quickly in the morning?
Very quickly. Very small scalps, but green.
I mean, you want to compound it. Some of you guys are like, oh man, my contracts went from, if I held this, would have been this. Yeah, also could have gone to zero.
Yeah, I don't give a shit about that.
Yeah.
But yeah,
yeah.
you're right.
So, I mean, don't spend too much time dwelling over what could have been, should have been. Your goal is to repeat the system. As you know, you're just a small fish, right? So don't stress too much what could have been or would have been. Once you have the right risk parameters, then you can increase your holding periods as well. Your goal now is to figure out the entries, manage the stop loss and risk management. It's not really to grow your account from 1,000 to a million. It's not going to happen. So, all right. With that being said, I just want to look at the session today just so you guys understand it, right? So if you guys have questions, we can kind of go through it. I think it was a fairly simple session, and I think the plan that we had previously worked pretty well. Is anyone confused from the notes I posted like this morning, 5 or 6-ish? Besides the fact that I fucked up on a PDL and PDH on my templates.
I was not able to figure out how did you get C value area high.
Besides that,
Mine level was different.
Okay. Anyone else?
no.
Okay. I'll just cover the concept that you guys need to really understand it. And hopefully, most of you guys have been here and more senior. This is your bread and butter, guys. The waiting for 1 hour, if you're new and patient, a lot of you guys are probably, I know how you feel. You come in, the market opens. If you're trading on toss, I think you have the contracts loaded up the way I showed you that I have them. If you don't and you'd like to learn, we can hold a session where I can cover my setup on toss, which helps the execution, right? But I think majority of you guys have some kind of process where if you're on toss, that you're not clicking the trade button on the top, then copying the contract, right clicking buy, sell. That takes too much time. So if you are doing something in toss that's not really automated using DOMs, maybe comment so I know how many people, and then we can target setting up a DOM, setting up a watch list, setting up and copying contracts. So that way, you can trade a little bit faster, right? There's multiple ways to set it up. I can show you at least 2-3 ways how you can set that up, and also depends what kind of real estate you have on your monitors. Right, if you have 1 or 2 giant monitors, 49-inch or 27, 2 of those, you can become really creative how to execute it, because the speed in what sense you set it up and kind of make the process smooth, like where you don't click 35 buttons to buy, order, or sell, that helps, right? And especially, if you're on Robinhood or any of those, I don't even know what you call them.
People.
Yeah, those type of platforms where you don't have the DOM and you can trade it up. I think it'll be worthwhile for your time to set up the session. And the best thing you could do is, as I do it, you do it, and you set it up. So it'll be kind of like a mimic session. I do it, I show you basically a brand new toss. I set it up and we go from there. So I'll schedule maybe a class for Sunday. I see a few people interested, at least 3, so that's enough for me. So I'll set that up, okay? Today, let me just kind of give you you guys asked, why that level today, right? So if you look right here, I think I grabbed somewhere around here. Where's the day start? So it was somewhere around here. Is this the level that I had on the chart? CK, I think it was somewhere around here, wasn't it?
Yeah, it was around 41, 70, 80, somewhere around that.
Let me see my note. Well, I can't find the notes right now. I suck at finding crap.
Let me find it.
Yeah, basically it was when you look at this consolidation here, if I was to again remove everything, right? So you have some liquidity that hasn't been tapped, at this level here, and then you have a nice little range, right? I would say your range is right here. So if you look at this setup right now, you're below this area here, and then you pop back inside of it, and where are we now? We came back, for a retest. So all I did, and maybe depends, it was in the morning. I think, no, actually, I didn't grab this big candle here. I was looking more around this candle and the bottoms. So I think it was somewhere around here. So 41.72 for now. It's probably changing just because I grabbed the end of it. I wouldn't have known this, you know, a
Okay.
Thursday here.
I get it. I was just looking at 1 day, so but I didn't see you
No,
grab
no,
like
it was
4 days. Okay,
accumulative, right? So
got it. Got
cumulative
it.
means I grabbed a couple of days. And I
Okay.
think I grabbed, I think it was maybe all the way here. Yeah, I think it was here. Because what I do usually, if I see that we're in a range like this, so right, if I just notice a tight range and I look at the SVP and I see, a little bit of collision right here. We talked about these profiles, right? We also talked about, the POCs not making highs, if you guys recall that. So I was like, okay, well, if this is the range, let me just grab volume profile. Yeah, it was from here, I guess, to somewhere around here. That's what it was. Something like this, right? And I looked at it. I'm like, okay, well, this is the value area high, and it seems like I know it's developing, right? Because I have it set up this way. Oh, it shouldn't go. Should go like that. Okay, so it's a developing area, right? So I can't really trust the levels too much. But I was looking to give me a cumulative action of the volume, right? I'm able to see, where the single prints or small prints are coming on these shapes, like, this lowercase b, I see the single prints are coming up here. So that means there's some seller here, right, coming in. Here, I don't see a lot of single prints coming in. Like, for instance, right, on here, you had single prints buyers, like, meaning, they're like, hey, there's value here. And then they brought the price back up. So I was like, let me just see the full picture and where's the cumulative POC, cumulative value area high. So I know what are these guys thinking as a whole. And that's where the idea came from. Usually when I see that we are ranging, and I mentioned this a few times, I like to draw that, right? I like to see, where are these guys kind of hiding. So that's this kind of range that we're in now. And if you guys remember, this level, I don't know how much I've talked about it, honestly. I think I've beat it up too much already, to be honest. This level here, how many times did we talk about this VPOC?
Millions.
I don't know. I think we talked about it a lot. So I said this is going to be tapped. I think yesterday I mentioned it a few times as well. So if you think about it, this was, the price action. So if you look at this price action here, they accumulated, this was the news, right? This was Jay Powell just speaking or standing up. And then you see a bunch of single prints here. And we talked about, right?
4091 VPOC.
That was
right
4079, yeah. So 47, and here, if you look at this was the value area high. We talked about this briefly yesterday as well, and we said, the 4035 was going to be big just because of that level that we had around this area as well. So you had this massive kind of level here. This one was here. So I was like, okay, well, this is pretty interesting if you're breaking below that. And then, of course, you had the PD value area high and, the lows with the 80%. So today was probably the easiest day to short. And as soon as we failed, right, to make that cumulative value area high above it, then it was simple here. And I think this was probably one of the easier 80% rules I've probably seen. I don't know how long. It was really, really clean. Meaning, so now I'll show you if you guys don't know, whoever's confused about 80% rules. Is anyone not clear about it? It's okay if you're not. Wow, pretty impressive. So this was gold. Today, this was pretty good. So this is your PD value area high. And look at this retest that they gave you. They dropped here and boom. I mean, it does not get it better than that, guys. And I mean, you slice through the PD value area low. And what did they do? They give you a bear flag right into it, right? They gave you a fake volume here. So this was a trick entry here. But what did I tell you guys about secret supplies? Is there anyone, you guys see anything interesting here?
right at the PD value area where they
PDVAL.
dropped it. Yep.
And did they go over it?
Nope.
No, we did not go over that secret PD value, secret supply. So if you didn't short here, I mean, this was a great, I would say this was a really, really good short right here. And I know some of you guys, you know, trade what's called the FVGs. You know, in this case, you would have had one here as well. Like I guess it would be there, but you wouldn't be tapping. And I don't know the rules when you buy in FVGs. You buy the tab? Does it go inside? So I'm not really sure about that, but I'm telling you how I trade it. So here, you know, if you're looking for confluence, you had the PD value area low with the secret, you know, kind of supply hidden there. And then we just continued down. And once we broke, I don't know if you guys remember, I mentioned there was probably a high chance once you break that 41.35 that we're going to be going, you know, to this VPOC. 40.95 break was, you know, for me, the break right here was pretty much saying, okay, we're going down. If you guys just look at these candles right here, just pay attention always to large candles, right? So if you have these accumulations like this one, right? If you take a look at this and you accumulate, you know, with volume, well, don't extend it, right? If you look at this, right, the volume is fairly low. The profile is fairly low, which signifying it's more on a downside because it's a B shape. We don't come on this one. We don't come very close to it. I guess 2 points away. I wouldn't argue about 2 points on 4,000, you know, 4,100 points, right? So if you're to draw some kind of, I don't know what the distribution here, how it looks, it would be me cheating now to draw it to match. But there is something telling you that we're going to retest this level very quickly. So you had a balance here, which I'm going to shorten so you guys can see it. So you had a really nice balance here, right? I mean, you're accumulating and then boom, this has caused the imbalance, right? So if you just look at this profile, let's say you grab it from here to here, what profile is it?
Lowercase b.
B.
Lowercase. Lowercase b, and I mean, I'm grabbing this all the way down, right? So, and you see the highest concentration of volume was really around that action right here. After that, you know, the volume fell off and it became almost like single prints. This was, you could tell we were slowing down here a little bit, right? As you're approaching this level, because the prints on this sell-off here were also slowing down. If this POC was pushing a little bit down more, then it would be different. But I even push this now to the right. Just watch, is the POC shifting? It didn't really shift much. So it's kind of signifying, hey, these single prints on below the value area, like right where you see not really thick volume profile, they're really not selling right now. This was most likely to come back inside the value area, especially considering that we had this huge level that we've been watching as a VPOC for some time. But this level here is the one that's interesting. If you break the balance, what do I tell you guys about breaking balances?
Price
You always
discovery.
come for a retest.
You're gonna come for the retest. Remember, this candle here, this order here left some stuff unfilled. So eventually, you know, they drive it back here, and this was a good short. And I don't know if you guys, if anyone fibbed this, right?
That happened all day long. There
Yeah.
was multiple ones of those coming back for the retest, and then a bunch of limit order sells right there too.
Yeah, I mean, even this one, excuse me. I mean, even this one had it as well. So if you look at, you know, if you look at this one here, I don't know which, there's so many wicks here. I don't know which, I would have to go in like higher time frame to look at it. So here, if you look at it, this was one that broke here. They trapped a lot of shorts here a few times. And then they dumped it here. This one they retested, and then I mean here's the story where we're at now. But I think overall it was an easy day. And if you guys, you know, some of you guys might have struggled a little bit staying in a trade, and not necessarily do you have to stay in a trade forever, but if you have a lot of contracts, then you can, you know, sell majority of it and keep that one. Like for instance, the 4,100 puts went from my entry was $1.35, and I think they went over $22 by the end of the day. So I mean, let's say 28, well, yeah, even better. So if you had 10, let's say you made 100% on 8 and you sell another one, let's say a couple of 100%, 200-300. Well, if you keep that one is going to make you quite a bit of money compared to the other ones, right? Almost might be total of the other ones. So sometimes it just pays to play it that way, right? Where if you have multiple contracts, if your account's larger, you can do that. But when you're growing the account, you're not really looking for these massive wins. You're trying to figure out the price action, the volume, and see how you can profit from it and grow slowly. Okay, so don't get lost in the, man, I could have done this, could have done that. Okay. All right, so now it gets kind of simple, right? We know that this level is fairly important. A few days back, I don't know if you guys remember, I wrote a little bit about the JPM collar that they have on. They did sell for 65 calls, meaning if SPX was going much higher, which we did, JPM was at a loss about $500 million. Excuse me. Just yesterday, Dumpster posted something. He sent me a Twitter, and I just posted for you guys, where Andy wrote about a buyer of 2,400 contracts of ES 40/50 puts. So that created a little bit of an issue as well, and then the market reacted to it, right? They had to short, I think it was about 7,200 contracts. So they had to literally sell 7,200 contracts to be delta neutral. This is not like easy stuff to understand. So if you're new to options, right, I can't teach you this in 10 minutes, what that means. And then, the charm between the decay and when the price comes into the money, what does that mean? If the price doesn't go in his favor, how's he going to get out and how quickly the market, can explode? So let's see, if we are to break this 40-80 tomorrow, and let's say he goes deep in the money, let's say we go towards like 4,000, and he closes the position, it could bring a lot of volatility, because now what would the short sellers have to do?
He got a cover.
They got to cover. They got to buy back.
Yeah.
So it's going to be a little volatile, around these levels here. And I know these levels here, do you guys remember we marked these levels last time we talked about? We said almost 3x POC. Wasn't it like 40.53 the level here? Here, I'll just do it real quick. Okay, sorry, I missed it.
Oh,
Yeah.
I have two POCs. Same.
No, that's what I'm saying. It's a massive level right here.
Yeah, right around there.
Yeah. And if you think about it, right,
40, 50,
the way market works, right, and I don't know if any of you guys read that book that I posted, but if you read the book, you'll understand a little bit that even the bigger moves, depending on the time frame or type of buyer or seller you are, they need to create liquidity going up. They need to create liquidity going down. I think for the while right now, they're creating liquidity to push this up, right? They would try to get people exhausted on shorting, and they would just keep pushing up, because if they know what the intention of the market and algorithms are, all they have to do is trick the retail to think we're going to go short or reject somewhere, and then they load up and then they kill the puts. They load up, we kill the puts. Well, once you get, you kill them so much and they're not shorting, then they position themselves for short. And while you're expecting a bounce, they go short.
Yeah.
Right. So you have to kind of be in tune with it, right? It's almost like, in the book he talks about as well, like, being a musician, a lot of good musicians, they get in a zone and you just, they're in the zone and singing away. They don't really think about what the words are, what the note will be that they're hitting. It's just that they get in a zone and they're singing away, and they're not really thinking about, how they're going to react to something or not. They're just doing it. It's natural instinct at
Intuition.
that point and a muscle memory. Okay. So for a lot of you guys, you want to get to that stage, and you're just not going to get it overnight. And if you think you can, I mean, you're setting an expectation to fail,
Yeah.
and I can't help you. Okay.
Intuition, man.
And that's the key, right? So you have some liquidity that they're going to try to grab in this area right here. And then, of course, we have, a couple of value area lows here. The cumulative one is right here at 40.34. So I wouldn't pay too much attention to this one just because it's cumulative value area low, the random 3 days that I selected, or 4. So I would watch this, and then this level here at 4,008 might be interesting as well, because this liquidity has not been tapped. So they haven't been here, and now, you know, they've tapped this one, they haven't tapped this one. So when you think about liquidities, I don't think there's many, you know, in terms of VPOCs, we don't have much left to the upside. I would say this one here now is, you know, a VPOC here. Worth watching, right? That we have that, but besides that, I don't think there's much to the upside. So let me just disable the developing POC real quick. So there's one here. Hopefully you guys have that one. And this one is going to be a big level, just so you know. This is going to be a massive level here. Just look right here. This level is going to be huge here. And then this one is no longer a VPOC. There's some levels here, I guess around 4,000. So this area here is going to be crucial.
That one you just pointed out, is that 3988 VPOC?
3986, yeah, for me,
Yeah.
but probably
Okay.
close enough.
Yeah.
So, and that also right here, we have the 50% of the whole run up here from the lows to the highs is sitting at 4,000. So that might be a really, really good zone for probably a retracement. And then I'd be cautious here, because if the market makers are going to lose any money, right, on this trade, the big trade, you know, the notional value, I think was $4.6 billion. If they're going to lose any money on this, what do you think they will do to retail? I hate to say this. Whenever market makers need money, you know who they go after?
Us.
Retail. Wall Street bets.
Yeah, they always go after the weakest link. So if they want to create money, they could literally create a chop where people buy shit like what, think it was what, Tuesday? I mean, you're just buying and nothing's moving, right? If you missed the first 15, 20 minutes, you just gave the money away based on theta, right? So hopefully, you know, you guys are understanding what I'm talking about. But I would definitely watch this, you know, 40, 50, 40, 55 area, potential chance. If we do gap down, or let's say we move below this POC, I would say there's a high chance that we're going to visit this 40, 50. And I would not be shocked, you know, if, let's look at this. This is 40, 30. Yeah, that level is fairly, I guess, important now. Let me just see how much is this carrying over here. Okay. I'm just looking at the up cycle here.
The Jan VPOC is still untested, 4016. A little bit below.
Yeah, that's what I got in. 40, 15, 14. Somewhere.
Okay, so this is gonna be a pretty decent level here. Let's see. What were we saying about Jan? Sorry.
4015, Jan VPOC.
Oh, you wrote a CPOC on that instead of BPOC.
No, but this is a CPOC.
Oh, okay.
That was a cumulative one. I grabbed from the bottom to the top.
Oh, right. I'm sorry.
Are you talking about this one?
Yes, sir.
January. there's a little bit of support, huh? This area here. I mean, even this one here, this is, you know, your December. So in terms of value areas, do you guys recall us talking about this at all? This level now? Does it ring a bell? Does this ring a bell to anyone? Why we bounced here?
It's a Jan value area high. And we tested it.
I remember there was like very little.
And there was an
volume.
August value area low as well.
I think we said September, yeah, something like this. Was this the level we also talked about? Anyone recall that? We said that for the past 4 months, this was the value area high around 490.
Yeah.
That we haven't been to it. We broke, rejected, now you broke. This is coming back to retest. This is a huge level in terms of are we going to be accepted or not? And you see here, there's a lot of volume here. And you can see, you know, once you slice through this, there's really nothing here stopping you till this level, at least here, 4088. And then it started getting a little bit volume. So this is a fairly big level, guys. Let's see how we react to it. I think tomorrow there's a couple of speakers. And I think the reports tomorrow, right? I thought tomorrow there's some job report, maybe not tomorrow.
UK CPI tonight, and then some Michigan something was there.
Thought they had payroll tomorrow. Maybe not.
That was last week.
Okay, so this is, I think it's setting up obviously for, you know, if we hold this, you know, if we see that we're holding, and then you can look at kind of see if you're making higher highs, pay attention to the volume, right? I wouldn't look at the volume just now here, but there was a little bit of volume here. If you guys looked at this candle here, right before I said, you know, if we get a 10-minute print, do you guys recall that? Me saying pin bar, if you get a 10-minute pin bar, I would take that long. Does anyone remember that?
Yep.
I guess
I don't.
You guys are asleep.
No, I don't remember that. Sorry.
I might have missed that.
I'm pretty sure I wrote it. I think it was today. Okay.
Yep, it was today, Shorty.
Okay, I found it. What did it say? Watch the 10-minute confirmation on pin bar. If you're gonna play a bounce at these times when shit's like really collapsing, you wanna watch the 10-minute pin bar, and then you would put this, usually dependent, you know, how's the candle here. This one was fairly okay. To put that, you know, here, and then you can play this up to your liking, right? You can play the 50% of that wick as a stop loss, like right here, and you would be okay. And you know, this held, so you would have been okay all the way up to here. And this held, I mean, and this exploded, right? I mean, if you took the trades from 4088, then we hit almost 4090, 4102. Yeah, so I think, yeah. So I mean, this would have been what, like 17 points bounce. Total bounce was much bigger, right? But if you bought on the bottom, that's great. Some of you guys did. Right, some of you guys bought calls for a recap, I think, and you were able to make decent money. So, you know, candle formations, I talked about these multiple times in the watch list as well as the PowerPoint. These are some of the candles you want to be kind of watching for, right? And then you look at this massive push down here. I did short this a little bit when we hit the top because it was kind of like on a smaller time frame. If you guys look, this was like a ABC pattern here that we hit. So I was kind of interested to see where it would reject here, and we hit it on the money here. So that was good. Okay. I think from the perspective of, I think I went from here to here just in case somebody's wondering how. I think it was something like this, yeah. So I just grabbed this high to this low and I projected this ABC here. A small pullback and then see. So I was watching for this or this one here. I didn't think they were gonna push it this high, but okay. Any questions? 80%. Did anyone say they need 80%?
Yeah, I think there was someone in the group chat.
Okay, so 80% is fairly simple, right? If you look at the previous day session value, this could be for people that are shy to say something. So if you look at the previous day session, right? So in this case, you know, the session was here. So ignore these levels. I'll just put new ones here for a moment. And I won't mark them, but that's PD value area high, and I'll just mark PD value area low here. So what the rule says, if you, let's say here, you know, we opened above it. But the best scenario is when you open above or below the value area low. If you're inside the PD value or, you know, PD value area, it's not unexplored area. Does that make sense to everyone? Ideally, you want to be over or under when the day starts. And those are the best 80% rules. They carry a little bit more weight than the one that, you know, let's say you open here and then you pop, it's not clear, right? You want the bias to turn from, hey, we are over PD POC, we are over value area high, hold on, but we are being rejected. And then when you fall back inside, and we usually say, let me go here, and I usually say how many candles?
3 5-minute candles.
3 5-minute candles.
So you want 3 to 5. If you're a little bit more risk averse, that's okay. You can take 10-minute candles, but not a lot of setups, you know, might work in your favor because sometimes, you know, the moves are fairly quick. In this case, you had it, right? It was pretty good here. So you had multiple candles closing with you know, this level is PD value area high from the prior day, and this is your PD value area low. Okay. So especially that we are over this area, we had reasons why I might reject, so we won't go into that. But then we popped with a nice volume. I mean, look at this. The volume was confirming this in a lot of time frames, right? So if you look at this, it was pretty good. They sold off, they started picking up, and then really nice candle. So, you know, if you're watching to short this, yeah, you could have caught that. I think some of us caught even this move because this was a nice consolidation and then, you know, a bunch of wicks. But here was a beauty, right? You came back under it and you tap this retest PD value area high. This is a typical move that, you know, I call this in my world A+ setups, where you go up, you fail, and then, you know, you do this and then you dump, and from the bottom you come because you're showing weakness now. Here you're showing weakness. If you shorted it, let's say, you know, you're coming, let's say we're coming from a trend up, right? Let's say tomorrow, since this is our, did I mark these wrong?
Yeah, you're charting off today's levels.
No, I
Not
know, but I was looking
yesterday's.
at this PD POC. I was like, dude, is it off? No, it's good. No, I know. I'm charting this PD value area low and this PD value area high, which was yesterday's, Tuesdays. So, hold on, I'm confused. Fuck.
Oh, you're good. Sorry, that was my
Yeah.
bad.
Yeah, don't confuse me. I get so fucking lost with time. Okay, so there's the PD value area high. So what it says, between here and here, we have 80% chance that you're gonna go from the opposite extreme of value area high to the bottom of value area low. There's 80% chance. Okay, Arno, I don't know if you can hear me, but this is basically the best setup you can play if you're newer. It just requires patience. And if you start trusting this setup and you play it fully, I mean, this setup can really do well on your account. You're going from 41.53 all the way to 41.25. I mean, on SPX, you know, this is a major return, I would call it. So these, you know, they have 80% chance to be in your favor. So why not play them if they have 80% chance? Okay. So does it make sense now?
guys.
For sure.
Okay. So that's good. I mean, it's an important concept to add. Once you add this, you know, with the IBH and IBL, it's a fairly powerful setup that you can use for trading, right? And, you know, it might not click immediately, but, you know, as you get more comfortable and you trust it, you will be able to hold from here to here. So give yourself time and see it work, right? Okay. Tomorrow, what I would expect, honestly, is probably we're gonna dip here just to kind of, if they want to trap more shorts, it's really a neutral area. You know, when you think about the bigger scale, we're really, you know, haven't really made a move yet. We're just validating this area here. If we are to really short this, we need a nice move here and a rejection here, and then potentially go down and visit some of these VPOCs. I'm a little bit concerned about the trade that was put on for the ES because it can trigger a really, as the trade is getting closed, it can create a lot of bind. So that's the only thing I'm afraid of. You know, that trade is going to cause a lot of volatility. You know, the 40-50 level, 40-55 will be interesting because they will be in the money at that point.
4077 is January value area high. So once we go inside it and retest it from bottom, that's like
Yeah, this should be
accepting
great.
that area. Yeah.
It'll be a acceptance of that value. Right?
Yep.
Do you think they could kind of sell off to the CPOC or maybe like one of the other levels? You drew like the January VPOC and then kind of like keep it in that level because we do see that they previously.
I would think that, but that trade honestly just throws me off. I mean, you don't throw, not many people throw a week out $40 million.
Yeah.
That trade can have a little bit of gamma and delta complications in the market. And if it's at all related to JPM, you know, I mean, just think about it. JPM is not obligated to, you know, close it. They can close it whenever the hell they want. So it just depends how CPI comes in. If CPI, let's say, comes in super hot, or if I say this, if it comes in, just think about this scenario. If it comes in line, meaning expectations or lower, market could rally literally to $4,500.
Oh my gosh.
4,500.
Yeah, it could literally go up 500 points.
What?
Because this guy that's gonna be on the short side, if he doesn't close the position before CPI, and let's say CPI is bad, what's gonna happen to his delta?
It's gonna increase to basically one.
Because his price is gonna be further out of money, right?
Yeah, so it's gonna be decreasing.
So the delta is gonna be weaker, meaning the sellers of this, the market makers, won. So the buying that's gonna occur from, you know, the market maker is gonna be fairly aggressive. The further you're away from the price, the delta is lower, meaning for every dollar it moves less. So if the delta is 0.4 in a contract that you're looking, let's say SPY, that means, you know, it's 40 shares requirement to be delta neutral for that position if it's one contract. This guy had 2,400 of them contracts.
Holy shit.
But he's
Makes
got like a
sense.
40-50 strike, right? So if
Yeah, so if he bounce here, if he closes it, or let's say CPI is good before he closes it, let's say he's crazy, he doesn't take profits. And if we bounce up, remember he's short. And if price goes higher, that means his price from the strike, from the current price, the disparity grows, the delta goes down. The delta for the market makers would work in their favor.
But the market maker would have already neutralized their position by buying the shares based on the delta, which is as of today or
Well,
whenever he
they will
entered the trade.
start buying if they see the theta is going, the delta is going plus the theta, right? They will start buying. But imagine if that guy, once he calls the broker and is like, hey, I want to close it. You know how many phone calls are going to start ringing in that broker house from their clients? I mean, it's gonna be a shit show.
Sure.
Oh my
Shorty,
God.
just wanted to confirm. So he's short the 40-50 strikes, right?
He's short 40-50. I mean, buyer bought 40-50 puts.
And he has sold it. So if he wants to cover it,
No. A buyer,
Okay.
I bought 40-50 puts.
oh, okay.
I bought 30 million of them for next week
Oh my God.
with the notional value of 4.5 billion. So the market makers had to hedge and sell contracts. So
That's right.
so the market makers will win if the price goes the other way for him. And if it does, well, man, these guys are gonna make some decent money. So unless, tomorrow he closes, or I don't know what, you will know when he closes. You're gonna get a 20, 30 point drop on a candle.
But if he go below 40-50, he makes
Oof.
money, right?
Oh, dude, he's gonna. So the longer we go below 40-50, let's say we dip below 4,000, and then he closes. Now the delta is in his favor and against the market makers. Now the market makers have to sell more to hedge.
It will dump more.
It will do a lot more damage. It would be a big damage to the market.
So that means we'll be dropping more, right?
Well, that's, yeah. This guy can trigger a sell-off.
Oh, so that's what's happening after Valentine's Day.
So it could get really, really, really nasty, man. Like, and $30 million is not a lot, but the notional value and the delta hedging is what's potentially causing this hiccup. Not a hiccup, just a trade, right?
So if a buyer bought the puts, then the market makers had to sell shares, kind of to
They
make
sell
the
the
delta
shares or contracts in this case.
Okay.
You have to think about it from the perspective. You have to switch your mindset, a little bit. But I'm pretty sure they did not only hedge with selling contracts. I'm pretty sure they're also hedging volatility somehow. Okay. But hopefully that doesn't confuse you. I tried to explain it as Luz asked me, can you explain it as a 5-year-old? That's the best I can explain as a 5-year-old.
Oh, that's good. In fact, Wyckoff 2.0 is more clear now.
Yeah, I mean, you have to think, if you're on the other side, think about it. Market makers don't make money on profits. You guys know that, right? The dealers don't make money on making profits here. What they do is they buy your contract at 120, and then if they find a viable timing hold, then they will hedge it with the shares or whatever they have. And then if they find a buyer for it at 160, do you think they're going to sell it to you? Of course they will. They just made $40 on the contract. So think about it. If they do that with $1 trillion a day, some they win, some they lose, but most of the time they win.
Yeah.
House always wins.
Exactly. So for them, they're liquid providers, but they, look at Citadel revenue.
They're the casino.
16 billion.
Exactly. They're probably the only one that made money last year. Or profitable, to say the least. So hopefully this makes sense. If it doesn't, stay in there. It doesn't come overnight. It takes a lot of books, learning, friends, knowledge, reading, pick all of that up. But once you do, it's not a complex concept to understand. So hopefully it's not too much for majority of you guys. Is Catching Rockets working today?
Yeah.
Yes, he
Believe
is.
so.
The guy, his
Yeah.
wife.
Oh yeah, I picked up some MKC actually today. It was one
Did
of
it
the
hit?
ones on the list.
So it hit the level?
Yeah, I went down
It
to
did,
I
yeah.
picked them up around like 70, 73.
23, 73, 74.
MCK,
That's where
right?
it is.
Not MCK, right? Talking about McCormick, right?
McCormick, yeah.
Yes,
Sorry, did I say? I might have said the wrong.
MCK.
I'm dyslexic. You tell me one letter order, I flip that. Yeah, this is a good level. This is ideal. Yeah. In my opinion, good level. I think they're a good company too.
Yeah, I use their stuff all the time. Everyone I talk to uses them too. So.
What, you went out asking people in the house, say, hey man, let me see your, let me see what you got there in the kitchen.
A little bit.
That's pretty good.
MCK, D, TS Tyson, as well as SOXS. All of them are at that level.
Yeah, this one is good. Yeah, this one has a lot of stopping volume here, if you see. And somebody asked me to explain the seller's exhaustion that I was noticing on here. Does it make sense now or not yet?
Oh, you said buyer's exhaustion. That's why I was
Yeah,
confused.
yeah.
Seller's is
Oh, I'm
good.
sorry, buyer's exhaustion. That's what I meant again. Buyer's exhaustion, yeah.
Yeah.
So does everybody get it? You
Yeah.
don't need more than this. So if you look at this, right, you pay attention to this volume and you just kind of go down. So what are you noticing here is that on this volume here, remember, you're at supply. You've been running for a while. You're at supply and you're coming here. And I don't think we're going to just dump here. I think there's going to be a little bit of consolidation. They need to trap a little bit more people, right? They got to give them a taste, in my opinion, of the 4,300. But let's see if they do that. I think it would be really stupid for market makers not to, because the liquidity amount that you would get from getting these people to this level, I think it would be insane. I mean, think about Tesla. It went from, if you put money on Tesla at 108, you just doubled your money. So this right here, the volume is picking up on the selling as you're approaching. There is nice volume here as well. So, can I trust this one to take out all of these? Probably not. But a pullback was expected. So if you read the notes I posted this morning, it was, mentioning this, that there's potentially buyers exhaustion, even though I said sellers. Up here, and along with those cumulative levels, it was fairly easy trade kind of go after. And then stopping volumes, I think a lot of you guys are a little bit confused, right? Well, not all of you, but I would say majority of you have questions about stopping volume. So if you didn't read Anna Cooling book, I strongly suggest that you spend 3 hours of your precious life and read the book. I think it can help you understand even some other concepts of the volume, price analysis. So if you look at this, for instance, and it happens pretty much on a lot of time frames here. Usually after a sell-off, right, you will reach a price where the buyers find value. And think about the market auction theory. So buyers here, so initially they found, right at 1240, they're like, okay, well, I don't know, it's just, yeah. At 1240, they're like, okay, well, we're gonna run this price up, whether it was news driven or something, right? There was something driving the price and they were buying. And then at one point they said, well, I don't know if I'm finding any more value at this level. So then comes a stopping volume and a candle of this kind, right? And if you look at this kind, what do you notice about the volume? I mean, this volume here is kind of declining, right, between the candles. And as you're coming here, right, you see this, kind of like a hammer candle being built, and then you see a pickup in the volume. So usually what I like to do when I'm playing stopping volumes, like I mentioned earlier in 10 minutes, I like to play the break of the bottoms of these. Up to you on the risk management. You can use, if you're using towards the end of the day, use 50% of the body of the on the wick of the candle if it's a hammer like this. So you would just grab wick to wick or body to wick here and just find the 50% in this case. I'm just gonna here. So this will be your stop loss. So in this case, let's say you got stopped off here. You know, considering that this is noon, I think this will be fairly, you know, aggressive trade to take. You're risking how much? 8 points here in the middle of the day. I don't know. I would rather put it high of the day when it's this early, but that's up to your preference, right? Usually you look for that and then a stopping volume comes in. Then they drive the price, I mean, from the low here. So if you look at this price, so where's 1030? Am I regular? Yeah, I'm on regular. I'm like, why is this different? So then you see here, I think this was the day, right, with the owl. So maybe not the best day to show. But there was some stopping volume, and then they drove the price lower to the point, you know. And then you can look at this on different time frames. Like, how does 10 minutes look, right? So if you look at this on 10 minutes, let me make sure I'm still on the same day. So if you look at 10 minutes, is there any stopping volume here that you guys see? Candle formations and stopping volume, I don't see any here. Right? And then if you check 15 minutes, you know, does it show anything that you might like? Well, here, this is not a bad formation, right? So you're coming here, you get the bottom VIX, and then you're kind of opening there, right? And closing here, that's pretty good. And of course, you leave a little secret demand right here. And I don't know where this goes, but I notice these things as I'm trading. So now you just pop again to the higher, and now what happens here? Pay attention to this candle. This is a prime example of stopping volume. Hammer candle pointing down, and what happened to the volume?
Going up.
Shut
More
up.
than 30% of
This
loss candle.
volume exploded. Right, even though it's kind of towards 345, but it happens. You'll have to spend some time looking at these. I don't trust anything below 5. My preference is 10 minutes. When I see like 10 minutes, if you're really new to trading and you want 15 minutes, is pretty good. It will work a lot of times. And here's that secret demand doing the work. Okay. So does stopping volume help? And same is true up or down, right? You're looking for reversal in volume. We have it coded in your orbs. I have them here. So it's in your orbs. I don't know if you guys, let's see, this one here.
Go down on the
This one
inputs.
doesn't have it. I think this is a different one.
Yeah, it's orbs with targets.
I think it's this one here. Okay. Yeah, so here's the, you know, you guys will have, look at this stopping volume, SV right here. We added this to your script so you guys can see it. You can disable a bunch of stuff if you're not using this. You know, IBH, IBL, you don't need this, you don't need this. If you don't need any of these pivots, if you don't want to use them, that's fine. Right, so you can uncheck all of this. And you can get to this, and now you have, you know, you have the orbs, and you have the stopping volumes kind of showing you here. And the rule on this, and I don't know if sequence is on, is 30% more volume than a previous candle. And I think that's configurable here, where you can increase it. You know, if you put that you want a little bit less volume, you might get a little bit more, you know, negatives and positives here. So 30%, you know, you can test it around and see what the number is that you like, but you can change that. Okay.
I'm definitely gonna play around with that.
It's not a bad thing to look at when you're trading and looking at price action and candles and formations and breakouts, right? where you have large orders being executed. It's not something that you should ignore.
I've been using it and it works really good every day.
Yeah, I
Yeah, I
think it's
love
a great concept. And here's another, I'm pointing these out so you guys can train your eyes. I'm not doing it to be like, look. But here's another what?
Hidden supply.
This is a hidden supply. And where were we stuck for a while?
Right inside the.
Between a hidden supply and hidden demand. Remember, hidden demand, hidden supply off of this massive sell-off. So very interesting, right? And then I like to look at charts on 65 minutes. That's my, like, I would say that's my favorite kind of level. It wasn't really massive volume though, like. You guys see this?
The volume on daily was average today.
Just about. It depends what you're using. I'm using 30 days just to kind of have the latest. Definitely change this to use something more relevant. Maybe use 10, see how's that. So we're below average on 10 days. This is the volume I was talking about. This was good here. And now, I mean, you're a little bit up, but not that much. I think this level here is going to be crucial for them to break. And the reason why is if you guys just look at this and kind of zoom out. Fairly, important price action level. I think you could go on 3 days. Look at that. Price action wise of lower highs and higher lows and vice versa. Where would one short this? On this time frame, in 3 days or here even weekly.
Right under the green line, right under the trend line.
40.56.
The retest of the trend line.
And that's called trading SR flips, right?
Yeah.
If you think about higher highs and lower highs, this is your lower low, higher lows, right? And this is your higher high right here, and then this is your higher high. When are you in a bearish trend?
When you break 3788.
Exactly. So just keep in mind, we don't have a lower high yet. We have it on a single candle, but this candle is definitely not closed yet. So tomorrow, your weekly high is right here. So we have ways to go for the sentiment to shift. Anything in between here is going to be more like a chop.
Yeah.
Not saying there's no trades. I'm saying on weekly. Also on weekly, we're still, I would say you're still in bearish trend. You didn't really close above this level. So on SPY, I'm just going to delete all of this. A lot of people wrote once we get over, I think it was 410 level, and I'm not going to point them out on Twitter, but some of you guys have been in his Discord. I wrote to him that's most likely a trap. Once you go over 410 and you're going to close above it, I said just be careful of a trap. Of course, I'm not going to comment back to him. I feel bad, but if you're going long off of a single candle closing like this one, you need the price. Price will go, guys. Price will come back. They will go here and then come back. You don't have to worry that if they're going to price back. It happens all the time in the market. I mean, here, it always works. I mean, where did AMD come back? How did I know? Up here, I told you I'm putting orders at 50 and 60. I mean, for newer people, I have people in Discord that were here. I said where I was putting the orders on AMD when it was here. Where do we go? You revisit it. You're gonna go far. You're gonna go anywhere you want to go, but you're gonna come back here. And that's why it's called patience, right? And I did buy here and I sold it here. And I'll buy back again here. Okay. So you just gotta trust it a little bit, right?
How many times after you will say this demand has been totally exhausted?
Demand at this level, when you look at perceived value, at this level for AMD, I don't know how quickly they can lose the buyers there. Because think about it now. Let's say you missed this run on AMD. What are you gonna do when it comes to 55?
Of course, I'll take it. But that's like will be second tap.
Exactly. Well, it's a second tap, and let's say the second tap makes a higher high. It breaks 90, and then it comes back to 50. What are you gonna do?
See, my retail mind then says take it, but then the volume broker mind says, hey, it's the second or third tap.
Well, there's a value of of a stock, but then this demand here, for instance, on AMD, is fairly strong. And then there's another one. If they fail, let's say we lose that 55. Well, then I even told you guys if we lose that, I think it was 46 for me or something like that on a stop loss. Then it has a
Sell
decent
house
drop.
and take 36. Yes, I remember.
It will have a nice little decent drop to this level. So I would watch. Hey, you lose this, I'm not gonna hold 50% loss on a stock here, right? I wouldn't. I would cut it and then get back inside. Remember that when you have a V shape like this, where do you buy? Do you buy stock? Do you want to buy it on the left? If this is the price action and this is the price action, do you want to buy it on the left, or you want to buy it on the right here? Where do you want to buy?
Right.
On the right.
You want to buy it on the right. Most people retail buys it on the left. They get stopped out. Then I can give you an example. You buy here or here, whatever you bought it, you get stopped out, and then they go higher. So
I was about to ask you about this one. This in NVIDIA.
but this is a setup that I live for. This setup. This is my favorite candle setup right here. So I'm gonna patiently wait for this one here. It's building an abandoned baby, right? Bearish abandoned baby here. So I'm gonna wait for this one. We need one more candle to do its thing. Tomorrow, gap down would do it. We just need it to open below 204.75. See, where is it? It's looking good.
And when you're talking about back on SPY, the 410, what you're saying?
No, it was just a trap, market structure trap. So if you look at SPY, for instance, you look at this level, how many retailers were watching this level right here, like 409, or you can call it even, I think it was a 410 even. Like that, there it goes, 410 something. So this level, how many people are watching for this breakout? I guarantee you everyone saw this as an ascending triangle. It was going to go break the top resistance and go much higher, right? But there's no better way to grab liquidity than this pop. And if you're getting pressed on timing, and I have, I'm not saying it's timed, on purpose, but if you have a hot CPI, you sold a lot of liquidity. I don't see a lot of selling yet. I'm thinking they want to tap 4,300. I think they go here. But this is going to be a nice pullback if they continue here. Yeah, I think it has a little bit more, down, and then maybe hit this trend line somewhere around here. 396 would be a good pullback. They would get a lot of shorts then, and all the shorts would go like, oh my God, we're below 400. What do you think they would do then?
Run it up.
Rip it.
And then they rip it, and I think they visit 430, and then that's potentially where they knife it. But I don't know. They would need something. Tesla here, I mean, I think we've had these level. I think I just deleted them.
We had that 221 or something from that
Let me see
October sometimes.
if I can get it. I went too far with deleting. Oh, there it goes. So we had this level, and then there was a POC here, obviously.
That's the one I was
221.
talking about.
Yep. So I hope they push it to this level. I mean, I'm seeing a little bit of an exhaustion, right? So if you did anyone read the book I sent you guys to read? No?
Was there a book link to the
I'm still
book?
on the Atomic Habits one. I haven't seen. There was another one you posted. Was that yesterday?
Yeah, it's called Mind Over Markets. I don't know who.
Oh, that one. Okay.
Oh, I didn't get to that one yet.
It's a very good book. I'll add some components of it for how he explains when when you're looking for exhaustions, especially using profiles. Market profile is different than the volume profile, so hopefully you guys understand that. But the concept is the same. It's just what's the X factor, right? And the TPO, time, is the factor. In volume profile is the volume is the factor. Usually, if I was to say this equals, if I'm spending a lot of time at this level, right, there's a high chance that I'm doing what with volume? Also spending a lot of volume in that level. Because remember, dealers, their preferred choice is when you don't have imbalances, when you're trading in a range and they're just collecting fees. Okay. When you're on a trend day, usually, people don't sell sometimes as quickly. They tend to hold it. So the amount of transactions goes down. So in their favor, and the market has how many trend days compared to the balance days? Which days do we have more?
Like a 10th.
Balance.
Way more balanced.
Yeah, we only have like 3-4 trend days, unless it's some crazy times, right? So that's why the market makers prefer that, because they collect, hey, set spread here, and multiply it, because it's quick trades, and that means you're trading in equilibrium. People are buying the tops, shorting the tops, buying the bottoms, right? So responsible. And then you get the people that initiate the selling, right? And that's when you get the P-shaped profiles, the B-shaped profiles, a double B profile. When you think about confidence, is just think about this. Hey, I'm selling, but I don't know if I want to go below this value here. So what they do is like, okay, well, let me accumulate here, see if I get enough buyers, and then basically has, like this one here almost looks, if I look at this, it looks like a B shape for a moment. So here's your accumulation here. Well, what's going on here? Is this white? There it goes. So if you look at this, there's a nice high volume node here. Then you have these single prints here, and then there's this here. So what that tells you is like, hey, we sold off here heavily, right? And then you see a bunch of small prints, meaning it was quick. There was not a lot of liquidity here. And then they're like, okay, well, maybe let's see if we find value here. And this guy's like, nope, we're going lower. And they created another value here. And then they're like, okay, well, then I explained this before. When you look at these they created these small pockets of value, and then they just kept going down on Tesla. And then obviously they ran it up. And I think this is the death right here. This is where they're waiting for it. Does that make sense? So he explains that pretty well in the book about the volume profiles. I don't know if you guys know about TPO, and I don't use it a lot just because I like volume more than time. But the concepts of profiles, dependencies, what to expect when you're above value area, kind of what I put in the PowerPoints, is important, right? Then, market auction theory, he gives you a really, really good example about peanut butter. I don't know if anyone's read it. I think, I can explain it. I can put it up in the PowerPoint, but he does a really good job of giving you market structure and importance of the, understanding certain components. He covers the day types that I covered with you guys that are also in the PowerPoint and the PDF. So it's important that you understand that, because if you know what type of day we are having, most likely you can trade much easier for the day than if you don't. A lot of traders, new traders, are never introduced to the type of days. How many of you knew the type of days before you joined?
No.
No.
Definitely do not.
Not.
Nope.
And that's sad. You know, as a trader, I mean, think about it. Don't you want to know what kind of day the market's having typically and how it behaves?
Yeah.
I mean, like here, sideways, right? If you look at this, here's your, you know, maybe this looks like a double distribution, or I don't know, this looks like a typical extended. You're in here and then you break and close in. Knowing those things, it helps you, right? Because then you know if it's a long-term investor waiting on the bottom of a key level, right? Let's say it's lined up with the major POC on the bottom of that range. Well, it's most likely a buy, just like it was today, if you think about it, right? I mean, we spiked from that level. I don't know who it was. Was it Josh SZN? He mentioned the VPOCs. We rarely get a bounce from them. And, you know, I said that's a fairly wrong statement. I would say the VPOCs drive a really big push sometimes. It depends which ones you look at. And I explained to you a few times that certain VPOCs and demands and supplies are more important than others, right? If a demand creates a new higher high, that demand's going to be respected. Did we cover that before a few times?
Yes.
So if this demand created a new higher high, did it create a new higher high from here? No, it sliced through it, right? And then, of course, I mean, it held this level here for a little bit, right? When you come back to this level is going to be important, right? So did this demand here create a higher high here? So if you think about it, from this session here, next session, did we make a higher high?
Nope.
No.
Oh. Okay, so why would I care if these buyers were not able to push higher here? Why would I trust this demand? I don't trust this one as much as I trust this one. Does that make sense?
Yes.
If this supply right here is able to slice through this, and let's say slice through this liquidity here, that 40.29, and we know that level is loaded. That 40.30, 40.33 level is fairly big. There's a lot going on there. Look at the POCs to your left. Here, I'll just, do you guys see the level now? You can call this game whatever the hell you want. There's a lot of names for it, you know, especially now with new teachings, old teachings. At the end of the day, you can call this a liquidity. All I know, it was an imbalance. You accumulated here, you popped, you came back. Even though these people might think this is going to be a major bounce here, which it could. And this demand here, when we created it, did break these highs, and this bounce here created new highs as well. So logically, this level should be a decent bounce, right? If this level, let's say, made a lower high and it never had this candle right here, well, then the picture is different, right? If this looked, imagine this candle came here and broke, and let's say now you were coming back to this level, sorry, let's say here, you get the point. Let's say you're dancing here and you never made a higher high and you come back to this point, well, I don't know, this demand is fairly weak. You're not even able to take this out. And it was weak up to here. And I don't know when that day was for, maybe it was this. Was this the, I don't know what happened.
That was a
FOMC.
FOMC.
Yeah, there you go. So something had to happen, and you see the little bit of manipulation. So demand itself did not create higher high. FMOC did. I'll give you a homework. Find when this happened before. And you might see a pattern. Every time we fail to make lower highs, we call it the big brother comes and gives you a little push. And they just come in here, a little bit of an injection, and goes down. I'll just give you this as the last thing. I'm just gonna delete this. See if I remember how to do it. That's not.
Shorty, from where do you find this stuff? balance sheet.
Yeah, I didn't even know stuff like this existed.
Yes.
They changed names a little bit. Yeah, I think it's this one. Yeah, there it goes. Okay, so this is your balance sheet, right? So if you think about this, let's zoom in a little bit. They don't let you see more than a week because they only update it every week. What do you see here?
Drinking.
I've been doing some selling.
So if I was to say the balance sheet is slowly going down, I would accept the slope to be at a different angle, right? And I'm not trying to persuade you, but if I tell you a stock market fell like this versus stock market fell like this to get to the same point, which one is aggressive to you?
First one.
Left one.
Yeah, of course, the first one, right? Simple. Well, I want you to do some homework and look at the overlay of this chart with SPX.
Should go idly hand in hand.
It should. It looks
We
like
already
it.
know what's happening. We already know what's happening after Valentine's Day. Come on now.
There it goes again. So there's there's a little bit of disparity right now. There's a divergence being built. So let's see how they play it out. So that's all I want to point out. We're falling down. The liquidity is being taken out, and you're going up. So I don't know how can you add compare here? Maybe like this. That wasn't the name.
Is it Respel? WRESPL?
I think it's this one. Not this one.
You can add SPX here on top of it.
Oh, can I?
Yeah. No?
So you have to use your trained eye a little bit, right? This is not same timelines, I would say, but look at this. Can't change this. As you're going up here, so focus, let's say, focus from here. What's the difference here? From here to here, you're making lower lows, lower highs. From here to here.
That same thing happened around May, June timeframe, that July rally. Exactly same thing happened there.
Good, yeah. We continue down, this went up. Now it's a little bit more aggressive.
So we're approaching an apex.
Or what?
Approaching an apex.
What's an apex?
Two lines intersecting.
Oh, I wouldn't care about that much on this.
No, I know. I'm just saying, like, even before. It just...
Yeah, this is just a ratio on the viewing. I can make them not match at all.
No, of course.
Yeah. Yeah. So what you pay attention is higher highs, lower highs. If this is going up, this is going down. This has been going down since, I would say, call it the peak. Let's see. You're talking about maybe from here, April. So we've gone down, but then this gone up here. Then it took a dive. And now, yeah. It'll be interesting just to see what happens. So
what does the balance sheet consist of anyways?
So it's all your debt, your treasury purchases. There's a whole formula that's in there, and there's a bunch of shit. I mean, you have the repos, you have the liquidity injections out. It's managed by the nominal rate of the Federal Reserve Bank, and then they drive that with the reverse or regular repos. And then that's usually their main vehicle that they use to inject or out.
So when they're unloading it, then what is that? What are they unloading? I wouldn't say what they're loading, but what is it?
Well, think about it. They are taking money out of the market. They're taking supply of money out.
Oh,
If I'm taking the money supply out, I mean, it's going to be hard to get the dollars, right? And it's going to be, for companies that, or countries that owe America debt or carry our debt, right? Well, now if you can't get the dollar, you have to buy a higher dollar, right? It has a lot of complications in terms of global, like monetary policies. And you see, like, the yen, the USD yen, I mean, this one, it fluctuates like crazy just because we've been using them for swaps, FX swaps a lot. So it becomes kind of like crazy how, we had the lows here, drive it up. And I remember when we were actually here, and look at this. I mean, this went crazy, man, went crazy high and then dipped here, and then it's about to break down again here. So it does drive money supply, like your M1, if you ever heard of it, like it does drive that as well. So we could probably do a smaller class and not confuse everybody in the Discord on it.
That would be cool.
I'd be interested.
Yeah, I could put something minimal. Try to put it with charts and simplicity. I tried to explain repos or
came
reverse
across. I was watching
repos,
a
and I
video.
think a lot of
and
people
it was
struggled.
Oh,
Yep, go ahead.
oh, yeah, I was watching a video and it was this guy that trades electricity futures or something like that, and he made a claim. I have no clue. I haven't been able to look into it, but he said it was extremely volatile.
Electricity?
Yeah, he said
I'm sure.
electricity futures.
Yeah, I mean, I'm sure
I
it
have
is.
no clue. I don't know, but
I mean, think about it. When you're in a demand for gas, what happens to gas, right? It's volatile. They use it, to profit. If the high demand is for EV cars, and I don't think we have the cleanest way to get the energy. And I'm not one of those green guys, but I mean, if you're using coal to get electricity, I'm sorry, but like you're driving a Tesla that uses a shit way to get electricity.
yeah.
Unless you're, full cycle, you're getting solar, blah, 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 or I don't know. Eventually, what's going to happen to your electricity bill is going to go up, your gas bill is going to go down, but everything's going to be on electricity.
Yeah.
So you're replacing one shit for another shit.
Makes sense.
Okay. All right, guys. Well, I'll trade live tomorrow, and we'll see what we can do and kind of update on the 1K account. I don't know where you guys are. I'm almost, again, at 1.87 total. So I did withdraw 1,000, and then I put in 1,000, and I'm back to it. So
Thanks,
let's see
Shorty.
what we can do. All right.
Thank you, Shorty.
Thank you, Shorty.
Shorty.
Appreciate you, buddy.
Have a good night. Have a good night, everyone.
Good night, guys. Have a good
Thanks.
one.
You too.